Good day and welcome to the GTR panel on mobilizing development finance, a necessity for African economic resurgence. My name is Jesuseun Fatoyinbo. I head up trade for Stanbic IBTC. Stanbic IBTC is a leading end-to-end financial services organization in Nigeria and also a member of the Standard Bank Group, the largest banking franchise on the continent. I'll be moderating this panel discussion, and I have an eminently qualified panel to discuss the subject. And on that note, I want to warmly welcome our panelists and invite them to introduce themselves. John, over to you.
Thank you, Jesuseun, and good afternoon and good day to everyone. My name is John Martin Ndawula. I'm the Associate Vice President in charge of financial institutions and trade finance at African Finance Corporation. AFC is a leading Pan-African multilateral finance institution whose vision is to become the leading provider of infrastructure solutions in Africa. The corporation was established in 2007 with an equity capital base of about $1 billion to be the catalyst for private sector-led infrastructure investment across the continent. As of December 2020, the balance sheet had grown to approximately $7 billion, and the capital had also increased to about $1.7 billion. And also AFC is the second highest rated institution in Africa with an A3/B2 rating from Moody's. And I'm happy to speak here on behalf of AFC.
Yeah, thanks, John. Mubarak?
Thank you, Jesuseun. My name is Mubarak Elegbede. I work with ITFC, the International Islamic Trade Finance Corporation, which is also a member of the Islamic Development Bank Group. ITFC is Moody's rated A1 and a member of IDB Group, which is rated AAA. The business of ITFC is short-term trade financing, and we have been in this market space since 2008, serving our member countries. About 57 of those 57, 13 of them are members of the ECOWAS sub-region that consists of about 15 countries. So this is apt for this panel. In terms of ITFC business, we have done since inception maybe about 60 billion of trade financing volume, with an average volume now as a 2020 about $5 billion per annum. I'm happy to be on this panel and to be able to contribute to the discussions. Thank you very much.
Thanks, Mubarak. And over to you, Moussa.
Thank you, George. Thank you for having me in this panel. My name is Moussa Toure, Senior Underwriter, West Africa Representative. My company is ATI, which stands for Africa Trade Insurance Agency. We provide insurance coverage for trade and development finance in and for Africa. ATI is a multilateral guarantee agency mandated to attract investment and increase trade within Africa. ATI provides a range of products ensuring credit and investment political risk. Therefore, we insure product against political and non-payment risks in our member countries, and on limited basis, in our Africa member country, any transaction coming from any African countries. I just want to add a few. In 2001, we have insured transactions exceeding $66 billion, and currently we insure trade and investment worth an average of between 1 and 2 of GDP annually in our member country. I just want to stop from here, and then if there is any other question, we'll take it from there. Thank you, George. Thank you, James.
Thanks very much, Moussa, and a warm welcome again to you gentlemen. I'm definitely looking forward to a very engaging and insightful conversation over the next 45 minutes. And I should just note to our distinguished audience, I want to say that you can be part of this conversation, and this is very simple by just submitting your questions or your comments directly to the panelists. You can do this using the chat function, on the screen, and we would receive your questions here. And I can make a simple promise that I will do our very best to get through as many questions as time permits us to. Now, kicking off, and I think a good place to start really would be where we currently find ourselves. And just over a year ago, we gathered physically in Lagos for the GTR Resurgence Conference 2020. And at the time, I think at best, we were speculative in terms of what the impact of the coronavirus would be. But now we can look back and we can say it's been very tough, it's been challenging. Detrimental health consequences, grave economic conditions and disruptions. But also it's been a year of opportunities. And I think, John, to you, the question is, how do you think multilateral development banks responded to the challenge? And would you say that they did step up to the challenge?
Thank you, Jesuseun. Yes, 2020 was a challenging year. I think that goes without saying. You spoke about some of the impacts which we saw. I think the ones to highlight are those from a socio-economic perspective. Everyone has seen the numbers, in terms of the people that have been lost, the lives that have been lost. But also economically, we've seen the African GDP contracting, dropping by about 2%. We've seen upwards of 30 million people going back below the poverty line. So all of those things, if you put them into perspective, will continue to have an impact on the continent. I think African MDBs over the years have developed experience, first from the global financial crisis and now from the COVID crisis. We've noticed from back in 2008 that, when things like this happen, whenever there's increased uncertainty and there's a deleveraging cycle, MDBs need to step in to fill that gap. And I think this time around, we've done that ably as multilateral development banks by, virtue of our uniqueness, our unique constitution. We find ourselves being the ones that are able to kind of stand in between the interests of the public sector and the private sector, because naturally there's a kind of divergence between the interests of the private sector and the public sector. So that is what causes the deleveraging when there's periods of uncertainty. But by the nature of MDBs, we come in, we continue to raise capital, and we continue to deploy that capital during times of economic uncertainty. And that's what we've seen. I think on AFC's part, we played quite a significant role. We grew our balance sheet by $1 billion. We did not contract. So that shows you that we continue to finance infrastructure, which is our core business. We continue to finance FIs across the continent, but we also provided support in terms of, aid relief directly relating to COVID, providing up to $2.5 million in Nigeria, up to $6 million across the West African region through some of our partners. So I agree with you that MDBs continue to play a critical role.
Great, and thanks. Mubarak, I want you to weigh in on that same question, but I'd want to add that, and as John has done, if we take 2 steps back and reflect in terms of the direct impact of the pandemic on trade itself, with the disruption in supply chains, access to credit curtailed, structural challenges within the sub-region, exasperated. What specific initiatives did you lead and your organization lead in response during that period?
Okay, thank you very much. For us at ITFC, quite a number of the multilaterals, I think the first thing was to do maybe a stock taking, because I think for most people, the initial thing was sort of an initial panic, because we really didn't understand what would be the outcome for the market. So same thing from our side, we thought, okay, with this kind of unprecedented situation, what will be the best approach? So at ITFC, what we felt was important was to assess our ability to be able to stay in the game for long, and then also to assess our abilities to be able to support our clientele. So broadly speaking, we approached the matter maybe under four main topics. The first one, like I mentioned, is stock taking. For administrative purposes, we had to set up to modify some of our working procedures to cater for remote working. Fortunately for us, we already had that in place. So we just fine-tuned that to get our staff to be able to reach out to all of our clients across the globe. As I mentioned previously, we have obligations primarily to 57 member countries. So first and foremost for us was to put in place a communication channel to be able to talk to our clients, and it was mandated to speak to our clients once a week, at least in the minimum, so that we could get their feel as to how they were looking at the market or what their outlook was, and what were the immediate problems they could see in front of them. Based on this kind of engagement, we're able to tailor specific interventions with the peculiarities of each of our clients. What we thought would work was we were not so bullish in terms of expanding the client base. We felt that at the time, the best thing was to ensure the survival of existing clients. And this is what we did. We're able to put in place immediate finance support to our clients. The next thing we did was to do what we call a two-step strategy. The first one was to put a broad financing in place for our clients and countries to be able to meet purchase needs for the COVID. Initially were PPPs for some of our clients. And immediately we also saw that the needs were beyond medical. There was a need to get the energy going because people were remotely working, stay at home, and then also the food supply. So there were some disruptions, but for the African continent, we were fortunate to have clients whereby some of their supply chain was within close reach. So we managed to put some financing in place for our clients to be able to ensure food security, energy security, as well as to be able to cope with the challenges. Another thing we did on the soft side was for technical assistance and capacity building. We, in conjunction with our partners, we were able to do trainings on harmonization of medical standards, for example, in Africa, or how would people respond to the COVID crisis itself. So we're able to work with some of our partners in Institute Pasteur in Dakar, Senegal, for example, because they were in the forefront of it. We also have strategic partners spanning the continent. Some of that I will mention subsequently. The second thing was to start to discuss with our partners on post-pandemic, after the first phase. What will we do and what kind of support will be needed? So I think we tried to do this, and we saw this kind of cooperation also with our our strategic partners on the continent. As I mentioned, ITFC is multilateral. On the African continent, we have very strategic partners, including the Africa Development Bank, Afro-Exim Bank, BADIA, Arab Bank for Economic Development in Africa, BOADE, and then the ECOWAS Bank for Investment and Development, which is specific to the West Africa region. So our efforts was to ensure that we keep dialogue with these partners and to see how we work together through the cycle. As you know, MDBs, we have what you call the long breath. We have the ability to stay in the game longer, and we try to use some of these tools and resources to be able to deploy financial interventions. The last thing we did was to commission a survey somewhere around mid-year 2020 in conjunction with about several partners, if I'm with liberty to mention them: AFDB, as I mentioned, BADIA, BOADE, East Africa Development Bank, the International Chamber for Commerce, ITC as well, and then TDB. What we did as multilaterals was to see with the clients on the continent what we have done up to June, how did they see it, and what else could we add to that to make things better. So we did this, and that formed the policy steps for the next phase after the post-pandemic or post-2020. Thank you.
Thanks. Moussa, I'd like you to weigh in also on this question. But again, in your opening comments, you had highlighted your role, or your organization's role, I should say, as a trade finance facilitator and developmental projects. So I guess the question to you, in addition to that, or the context of the question to you, would be, did the pandemic give you a unique opportunity to realize your objectives, which is focused on improving the quality of lives and elevating poverty in Africa? And how did you lean into that opportunity? Hello, Moussa. Okay, I think we might have lost Moussa, but we'll reconnect with him later. Just to announce again for our distinguished audience that you can be part of this conversation by submitting your questions to the chat room, and we'll pick them up subsequently. John, are you still with us?
I'm still with you.
Oh, okay. I guess I should pose this question to you. And I guess that's relatively important because in your opening comments, you highlighted the fact that the challenges were not just social and economic. They were also significant health challenges. And analysts tell us that if we're going to talk about an economic resurgence for the continent or for the sub-region as well, that a significant driver of that will be vaccines and vaccinations. And this point was recently echoed. As a matter of fact, the IMF resident representative in Nigeria was at a session yesterday where he re-echoed this point, that we can only solve the economic challenge or begin to solve for it if we solve for the vaccine and vaccinations. So I suppose my question is, considering that the immediate requirement is partnership with MDBs, most of these MDBs have, however, focused on the vaccine or sourcing, securing, or purchasing the vaccine itself, with limited conversations around infrastructure and the value chain in terms of getting the vaccines to people under the right conditions. My question, therefore, would be that, do you think MDBs are doing enough? And what do you think can be done, or what more can be done, especially with respect to the infrastructural requirements and value chain requirements for getting vaccines to people in good conditions?
Hello?
It seems like Moussa is back with us, but I'll just take that question and thank you, Jesuseun. So as Africa Finance Corporation and as an MDB, we are keenly interested in terms of the distribution of vaccines across the continent is concerned. We recognize that things will not get back to a semblance of normal unless we have a certain proportion of African citizens having received the vaccine. Therefore, this is a significant task that we cannot undertake alone, but we are looking forward to partnering, or we are in discussions with other DFIs like ourselves to partner. There's discussions around putting in place a facility. I think the number that we are looking at is about $2 billion within a club of DFIs. So that facility will be availed to African sovereigns or African governments to support their efforts with regards to purchasing vaccines from vaccine manufacturers, and then distributing these within their populations to ensure that the threshold or the required limit or proportion of the African population actually receives this vaccine. So that is one of the things that we are doing as AFC. Now, coming closer to infrastructure, as I said, infrastructure is AFC's core business. We see infrastructure really as the bedrock of economic development in Africa. The intra-African trade and the whole discussion around the African Continental Free Trade Area is probably something that we shall talk about subsequently. But before we even get there, we need to link our value chains. We need to integrate our value chains. This will help us to drive down the cost of production. This will help us to have access to bigger markets, etc. And the way that we can do this is by having in place developed infrastructure. We're aware that the infrastructure gap in Africa is said by the African Development Bank to be about $130 to $170 billion, and half of that is unfunded. Within AFC, we do our part in line with our vision to be the leading infrastructure solutions provider in Africa. We do our part to continue to develop infrastructure assets. As part of our strategy, one of the things that we want to concentrate on now is what we call infrastructure platforms and ecosystems. So we're focusing on developing platforms, for instance, for port assets in Africa, or platforms for industrial zones in Africa. So you've probably heard of one called Arise Integrated Industrial Platform. That one develops industrial economic zones in Africa. So again, because of COVID, one of the opportunities that we are seeing is, the opportunity for increasing local beneficiation. When there was a disruption in supply chains initially at the start of COVID, I think the question on everyone's lips was, how are we going to continue to feed our supply chains? So that highlighted the importance of developing our own supply chains. So through these platforms like Arise IIP, which I've mentioned, AFC aims to develop various industrial parks in various countries in Africa as part of some of our local beneficiation efforts. So those are some of the things that we are doing in this regard.
Yeah, thanks. And Moussa will come to you, but let me just go to, I'm trying to move this along. Let me go to Mubarak, and after Mubarak, I'll come to you. I think Mubarak, the question moving away from the vaccine would be maybe one of what I call the positives from 2020. And that's despite the challenges or the realities that were brought upon us by the pandemic. African countries, by and large, I should say, remain committed to the continental free trade agenda. Now, with Afrexim and AFDB in the forefront, how do you think, or what do you see your role as an MDB in the continental free trade conversation, and more importantly, what initiatives are you leading in that regard?
Okay, thank you very much. Very apt question. From ITFC side, from the early days, we understood the importance of the AFCFTA, and because of that, from earlier on, we entered into strategic discussions with the Secretariat of the AFCFTA, as well as the African Union, to be able to be part of the conversation from the beginning, also to understand their dimension for the implementation of the agreement. So the normal things, we've signed agreements to work with them, to support the Secretariat with some of our interventions, because as I mentioned, quite a number of our member countries operate on the continent, and it will be to their benefit to derive the maximum opportunities available under the AFCFTA. What we are seeing is from our side, how do we help the country's national programs to fit into the AFCFTA, and where are their comparative advantages, and what will be the steps they will need to take to be able to derive the benefits from this agreement. So, like I said, we have the partnerships, and in the partnerships, we have a roadmap. The commencement of the AFCFTA started January 1st. Even this year, we've already had a couple of meetings with the Secretariat on how the journey will be with the full rollout, and the implementation of the agreement. From the side of the multilaterals, what I think is the importance for us to, partner together to be able to develop program specifics. As you know, before the AFCFTA, you had the regional blocks on the continent, and to some extent, the harmonizations here and there was needed to be able to fit into the whole continental program. So from our side, what we're trying to do is to support the AFCFTA engagement in terms of the harmonizations, as well as financial support with regards to maybe the possible loss of revenue for some of the countries where they prior to the AFCFTA. Thank you.
Okay, thanks. Moussa.
Yeah, thank you, Yusuf. I'm sorry, I lost the connection. What I want to say in this situation, actually, I'm going to answer both questions that you asked in the beginning, and we are in line, same line as Mubarak said. But first of all, we'll talk about our cooperation with other multilateral organizations. Our main area of cooperation we currently have with other multilateral organizations are in the context of what we call co-guarantee platform, CGP. That's where ATI, another insurance company, fight against this pandemic. And this GCP, let's say, is the IFD initiative that brings together the leading guarantors and insurance provider on the African continent to better coordinate and pool their capacity in support of transactions across Africa continent. So we done transaction lead by Afrexim Bank, and currently Afrexim Bank and ODA, NEPAD are other multilateral which are part of this CGP. So in the context of the COVID-19 pandemic, the CGP is currently operational, contributing in the whole process of fighting the pandemic. And we will grow in the post-COVID environment by providing coverage, but insurance coverage against default on a wide scale. What I mean here, for those kind of transactions, and company like us will play our role by providing insurance coverage and to facilitate the acquisition of those vaccines. Up to date, there was two parties to the CGP, which is ATI and Afrexim Bank, after to provide, we are part of Afrexim Bank, to provide insurance cover for an LC confirmation facility for a Nigerian bank. I will not name it, but it was for Nigeria at that time. It was bring support to Africa financial institution in the wake of the global COVID-19 pandemic and declining commodity price. So at that time, we had this issue. And we were at the beginning of the COVID at that time, and there was some financial institution, various party currently under the CGP, because that the CGP that gives us a platform to provide our insurance products to help Africa are looking to participate and support for African-led vaccine procurement initiative. As you guys may know, Afrexim Bank is initiating that program with the United Africa to provide some vaccine. I think it's about 260 million vaccines, something like this. So we are part of it, and we are contemplating to participate on that one also. But in terms of ATI strategy for West Africa, and as you know, we are the COVID pandemic.
I think we've lost Moussa again. But John, let me come to you, and I should acknowledge the questions from the audience. They are coming through. I'm seeing them, and We'll be going to the audience question just in a minute. But before we go to the audience questions, I want to move this conversation a bit more towards developmental support specific to small businesses on the continent. And I think that is extremely important considering the fact that according to the World Economic Forum, small businesses account for roughly 80% of private enterprises in Africa. And what access to finance for this category of people seems to be, to a significant degree, curtailed. And while the gap is closing, and I think John mentioned that in your response earlier on, you had mentioned the fact that a significant portion of the infrastructural gap remains unfunded. So while the gap is closing, and in terms of the unmet demand from a credit standpoint, there's still a significant portion of unmet demand in terms of trade finance. So considering that commercial banks have the footprint on the continent, have the market access, is there a potential, or is there the opportunity for initiatives between development financiers, MDBs, and commercial banks targeted at small businesses? And for instance, guarantee programs, insurance programs provided by multilaterals to support lending to small businesses. Are you able to share your thoughts in that regard? Initiatives specific to small businesses as against not just the broad requirement of corporates across the continent.
Yeah, thank you, Jesuseun. So as I said initially, the challenge again that we have is that, in times of crisis like this, we see a lot of global funders retrenching from our markets, and therefore it becomes incumbent upon multilaterals like ourselves to fill that gap. Now, one of the things that puts multilaterals in a unique position to fill the gap is, first of all, we don't have some of the challenges that you commercial banks have. For instance, like AFC is self-regulated, but we also funded in US dollars. We have US dollar capital. We have a US dollar balance sheet. Therefore, when it comes to some of the regulatory restrictions that you experience, or some of the foreign exchange restrictions that commercial banks experience, we find that we're in a better position to come in and support. So two things that AFC leverages to provide this support to commercial banks in Africa is, first of all, as I said, the US dollar balance sheet. We have about $1.7 billion in equity, and we also raise financing from the global markets. In fact, last year, at the height of COVID, AFC was successful in raising a $500 million Eurobond, again, to finance our activities. We also raised a 150 million Swiss franc green bond for deployment in sustainable development activities. So using this funding, we're able to support not just the infrastructure projects, but also African commercial banks with their, especially US dollar funding requirements. As I said initially, AFC is the second highest rated institution in Africa after the African Development Bank. We're rated A2 by Moody's. So what that does is that it puts us in a unique position, in a favorable position, to stand as a go-between between African financial institutions and the rest of the world. So we are able to issue payment guarantees that the rest of the world finds acceptable, and therefore they will, based on our risk appetite or based on our balance sheet, be able to avail trade financing lines for African FIs. Now, when it comes to your question on SMEs, we're unique in our structure as a DFI. We don't have the geographical reach that commercial banks have. We don't have the large back offices. We've probably decided not to invest in some of the technology that you banks use, but we aim to deploy those two key strengths that I spoke about, the US dollar balance sheet and the investment grade rating. So how do we do this? We partner with banks. We partner with banks that have these other things that we do not have. So last year, for instance, we were able to deploy, for instance, in Nigeria, more than $200 million in medium-term financing to one of the development banks in Nigeria. The bank ably deploys this liquidity for financing micro and small medium enterprises. We also provided more than $250 million in ongoing credit limits to African financial institutions, not just in Nigeria, but also across the continent through various partnerships. And that money goes from us through banks, and it's on lent to the medium and small enterprises that still need it. The other product that we've offered is the guarantees. We've been offering payment guarantees, to enable, for instance, lenders based in London or lenders based in Dubai to come in and provide financing to African banks against our own guarantee. So that's also one of the things that we do. Now, have we done enough? Perhaps not. I think there has got to be a balance between risk aspects and what DFIs do, and that is always an ongoing conversation. But I'm happy to say that I think given what we've done and what I've seen other DFIs do, DFIs in Africa have generally stepped up to the table to mitigate some of the effects of COVID-19.
Thanks so very much. And it's as if you listened in on the last panel, where the bankers on the panel kind of gave you a 10 over 10, I should say, MDBs generally, in terms of the support over the last 12 months. Now I will be going to questions specifically from the panelists. I know my question to you, John, kind of touched on this, but I want to pose the same question to Mubarak. And this is a direct question from the audience. Sorry, question from the audience. This is a direct question from the audience. And the question goes, how do panelists feel they can best support the development of West African SMEs? And I want to pose that to you, Mubarak. So okay. Taking the same tab on the question John has tried to answer, yeah.
Okay, thank you very much. Just because of time, I'll try and move a little bit fast. For the West African market specifically, at ITFC, what we thought to do, just like John mentioned, we don't have the footprint like commercial banks, and our approach is very simple. We have what you call the strategic partners with institutions that are present in all of the regional geographies. So for West Africa, I mentioned we have a specific relationship with ECOWAS Bank for Investment and Development. They are located in the region and they do some work. We also have engagements with several commercial banks operating across maybe about the 15 countries in the ECOWAS region. And what do we do? Because they understand the SMEs better and they have the, like you said, Jesuseun, in your question is actually the answer. It's about partnership with local institutions. We cannot, I sit in Jeddah, a lot of my team sits across the globe, right? So we cannot be present on the ground like the commercial banks. We cannot know the customers, the SMEs especially, as much as the local banks will know them. So what can we do? We can use our signature, which is the ratings that we have. For instance, we have A1 Moody's rating for ITFC. We operate within a group that has a AAA rating, and we can deploy this signature to help support local banks within the region with their LC issuances for imports, and then we can come between the buyers and the suppliers at giving and then helping them with our signature to reduce the cost of doing business. This is what we did successfully. In fact, because of the pandemic, we had to accelerate the launching of our direct LC confirmation product, which we deployed in the market sometime around June, July. And this was in response to some of the feedback we got from our clients. One other thing we did is out of that feedback, we, from 2021, we're carving out a private sector division that will address specific needs of banks and financial institutions at that lower level to be able to deploy solutions that can best fit. One other thing we have is what we call the West Africa SME program that will actually launch its pre-pandemic in 2018. What that program does is to be able to support specific SMEs and banks in terms of the assessment of their credit. What we realized from the business we had been doing was that a lot of SMEs were getting turned down in their credit applications. And we got in some partners and to be able to provide training in specific markets with regards to the peculiarities of those specific markets. So what that did was for us to help SMEs in each of those markets to be able to increase their approval rates for their credit applications at the bank. So not only did we do that, we then provided lines, financing lines to some of those local banks to directly support those SMEs. So this is what you call specific pinpoint approach. So this is what we have done. It can never be enough. Like they said, the biggest room in the world is the room for development. So there will always be more to do. So the message I take away from it is we'll continue to do the best we can do, strengthening our partnerships and putting ourselves out there to support the economies in the coming years. And I think that this is the kind of way we can help accelerate the economic recovery. Thank you very much.
Yeah, thanks. Moussa, I'd want to pose this question to you, and it's from the audience or from the participants online. How can SMEs easily access trade finance considering their size and high demand from corporates? Any special considerations for SMEs? And if you could highlight considerations within ATI specific to SMEs, that would be appreciated. Okay, I think we might have lost Moussa. Okay, John, back to you. Another question from the audience. In one of your comments, you mentioned the industrial pact. And this question is, will the industrial pacts be powered by renewable energy?
Thank you, Jesuseun. Yeah, so renewable energy and sustainability are topics that are high on the agenda of AFC. As I mentioned, AFC successfully raised about 150 million Swiss francs through a green bond last year. And that basically shows you our commitment towards financing green projects. Now, in line with the general trends in global finance, we would like to finance projects that meet our environmental and social governance standards. And therefore, to answer your question, we would aim for the highest levels of sustainability standards when it comes to the projects that we'll be financing as part of our industrial parks platform.
Okay, thanks. Thanks so very much for that. I guess one more question from the audience, and maybe we'll go to a wrap up. And this is in terms of SME still, and I know that a lot of information has been given out there, both on the AFC, ATI, and ITFC side, kind of what you're doing. But this question is around the regulator, and it's, can we have a regional development regulator that can supervise and manage developmental finance for the region? And I want you to take a stab at this, Mubarak.
From my point of view, I think this will be a bit complicated. It may be trying to mix too many things that may not work. If we look at our markets across the region, yes, they may have similarities, but there are a lot of peculiarities country-wise. What we know mostly is you have the informal sector that spreads across. What we know is that the bulk of the employment is generated by them, but standardizing at regional level may not work. You will have the issues, how do you mix Anglophone, Francophone, how do you deal with those kind of issues? So it may be complicated. For me, I feel that what we need to do is be traditional by following the flows and the dynamics and peculiarities of each market. On that basis, we should build the kind of partnerships at the MDB level and at local level with the policymakers. I think what COVID-19 did for us, or we should look at it, is an opportunity for us to be innovative and flexible and to be able to understand the primary things: keep people alive, put food on the table, create job opportunities for people. And then in doing this, we should try and put in place, we should not be too strict about what the lines or the rules are saying or how we want them to be. We should adapt them to what the market needs in order for the market to survive and be sustainable. This is what I think. Thank you.
Okay, I think we're running out of time, and I'd just to, close this with a view on the future, or the view of what we can, the lessons we've taken from the past year, most importantly, yes, and looking into the future. I guess this phrase has been, quoted significantly over the last couple of months, which is around that we should never let a good crisis go to waste. And if you look at most of economic analysis that have been, highlighted over the last 2 months, I would say, the view is that 2020 would be the year of recovery, year of resurgence. And in that regard, if we were to look forward, what, in your view, are the key risks and opportunities that you see in 2021 and beyond? And more importantly, talking about partnerships, how do you think the key stakeholders, be it commercial banks, be it central banks, be it policymakers, be it corporates themselves, how do you think we need to play? What steps do you think we need to take to increase access to credit and liquidity, especially from development financiers?
Sure, is that to me?
John, please, yes.
Okay, thank you. So after the crisis, I think there will be lots of opportunities. The African Development Bank expects that we shall see a recovery of about 3.4% in 2021, which will incrementally increase in the years to come. There is also an expectation that countries are going to need financing to the tune of about $150 billion just to recover from the effects of COVID. So there is no doubt that, as financiers, there will be opportunities. However, there also will be increased risks. One of the risks that we're watching closely is debt sustainability of countries, because, again, to try to capture these opportunities, one of the things that AFC has done is to put in place a sovereign lending desk. As an infrastructure provider, historically we concentrated on private sector-led projects, but now we are also actively lending to sovereigns, and we believe that this intervention will help those countries to recover from the effects of COVID. So debt sustainability is certainly going to be a big point of interest for us. I think there's an estimate that debt to GDP ratios of countries will increase by on average 10 to 15% in the coming year. So that continues to be an item to watch. But the biggest opportunity that I see is what I mentioned earlier, the need for local beneficiation. Last year, we were asking ourselves how we would survive when our supply chains for raw materials, but also for the goods that we produce, were cut off. So what the crisis has shown us in not letting a good crisis go to waste should be that we should try and be self-sufficient as Africans. So we should open up more trade routes, be able to trade amongst ourselves. That ties in with the objectives to build infrastructure to support such intra-African trade and to support African local industry.
Thanks, John. And Mubarak, I'll let you take a stab at that. And I think we just have 60 seconds. So
that's a very short one. For going forward, there are opportunities to be had. The emphasis, I think, should be on partnerships and making available resources to keep the bicycle going. If you stop on the bicycle, you're likely going to fall off. But if you keep pedaling, the likelihood of it is that you're going to be able to stay on the bicycle for longer. So this is the kind of philosophy we're using, and we continue to strengthen our partnerships across the regions. As you know, we are located in Jeddah, Saudi Arabia. One of the very key things we are trying to also do is to mobilize Arab funding to support African institutions under the program we call the Arab Africa Trade Bridges. Time did not permit to talk about this, but this is a big program that we see would be able to mobilize about $5 billion of support for the African continent in 2021 alone. So these are opportunities, and I do task the audience to try and reach out. Where we can support, we will support you, and where we are not able to support, we will try and point you in the right direction. But I think for the fellow MDBs, which we are also discussing with all across the continent, I think our task is enormous. We should step up to the plate as we have been trying to do, and we should be encouraged by the opportunity for innovation and new business opportunities. That's what I have to say. Thank you very much for having me on this panel. Thank you so much.
Thank you so very much, gentlemen. And we have come to the end of this session. Yeah, by no means the end of the conversation. As Mubarak has said to our dear audience, please, you can reach out to Mubarak, John, or Moussa, or myself to continue the conversation and to see how we can continue to partner and support initiatives on the continent. And I want to say a very big thank you also to the audience for your questions, for a great conversation, to the panelists for your insights, for your thoughtfulness, and most importantly, for the opportunities you put on the table for us to continue to explore. And I hope that this conversation has provided us with at least some degree of rich and insightful thoughts for 2021 and beyond, as we hope and we pray that 2021 itself brings us the required healing balm and the resurgence economically as a continent. Thank you and have a good day, everyone.